ExamPrep.School. Arizona insurance producer Casualty, commercial and non-commercial exam. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Casualty insurance basics, commercial automobile policy, commercial general liability, federal laws and regulations, general insurance concepts, insurance regulation, other types of casualty insurance, personal automobile policy, workers' compensation laws. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Regarding criminal history, which requirement must an applicant for an Arizona resident insurance producer license meet? A. Have no felony convictions unless at least 5 years have elapsed since release from incarceration. B. Have no DUI convictions within the past 3 years. C. Have no bankruptcy discharges within the preceding 5 years. D. Have no history of civil lawsuits related to insurance transactions. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is A. The correct answer is that applicants may have felony convictions, but only if at least 5 years have passed since release, in alignment with Arizona's moral character requirement for producers. Reason B is not correct. Arizona law does not impose a specific restriction on DUI convictions when considering producer license eligibility. Reason C is not correct. Bankruptcy history is not a disqualifying factor under Arizona's insurance producer licensing statutes. Reason D is not correct. Civil litigation history in insurance transactions is not addressed as a barrier to licensure under state regulations. Question 2. Which of the following is required when submitting an application for an Arizona resident insurance producer license regarding fingerprinting? A. A full set of electronic fingerprints submitted to the Department of Public Safety for state and federal background checks. B. A signed waiver authorizing the state to obtain credit information. C. A sworn affidavit confirming no felony convictions. D. A passport-style photograph. The correct answer is A. The correct answer is that Arizona requires applicants to submit electronic fingerprints to the Department of Public Safety, so both state and FBI criminal history records can be checked. Reason B is not correct. Arizona law does not require a credit information waiver as part of the producer license application. Reason C is not correct. There's no requirement for a sworn affidavit of convictions. Fingerprint-based background checks fulfill that purpose. Reason D is not correct. A passport-style photograph is not mandated by Arizona's insurance licensing regulations. Question 3. Which of the following is a ground for the Arizona Department of Insurance to suspend a producer's license? A. Engaging in unfair discrimination among insureds of the same risk classification. B. Failure to respond to an insurer's notice to pay a claim within 30 days after proof of loss. C. Conviction of a felony involving dishonesty or breach of trust. D. Operating without maintaining a surety bond or deposit when required by law. The correct answer is C. The Arizona DOI may suspend a producer's license upon conviction of a felony involving dishonesty or breach of trust as specified under state law. Other listed actions are either regulatory violations handled differently or not statutory grounds for suspension. Reason A is not correct. Unfair discrimination is an insurance practice violation but not a specific statutory ground for license suspension. Reason B is not correct. Late claim payment may result in penalties but is not listed as a suspension ground for producer licenses. Reason D is not correct. Failure to maintain bond or deposit may affect eligibility but is not explicitly a statutory suspension ground. Question 4. A licensed Arizona property and casualty producer was convicted 3 years ago of grand theft for embezzling client premiums, served probation, and paid full restitution. Under Arizona Department of Insurance regulations, which of the following actions constitutes grounds for license revocation in this scenario? A. Having been convicted of a felony involving theft or dishonesty. B. Failing to notify the department of a change of residence within 30 days. C. Temporarily withholding client premiums for 29 days before remitting them. D. Exceeding binding authority by issuing coverage beyond the insurer's limits. The correct answer is A. The Arizona Department of Insurance can revoke a producer's license for any felony conviction involving theft, fraud, or dishonesty, regardless of restitution or probation status, whereas the other actions typically incur lesser penalties such as fines, suspension, or reprimand. Reason B is not correct. Changing residence without timely notice is a violation subject to administrative penalties, but not automatic license revocation. Reason C is not correct. Short delays in remitting premiums normally result in suspension or fines, rather than revocation when under 30 days. Reason D is not correct. Issuing coverage beyond binding authority is a violation that can lead to disciplinary action or fines, but not mandatory revocation. Question 5. According to ARS Section 20-440-213, an insurance producer commits misrepresentation as an unfair trade practice when the producer A. Charges a premium below the filed rate due to an unintentional calculation error. B. Recommends replacement of a policy based on a comparison of cost without disclosing all relevant policy terms. C. Represents that policy coverage includes features or benefits that it does not have in order to induce a sale. D. Fails to notify an insured of every available policy endorsement upon issuing a policy. The correct answer is C. This option is correct because misrepresentation under ARS Section 20-442-13 is defined as making false statements about policy features or benefits to induce a sale. Reason A is not correct. This involves a rate error, which is not an intentional false statement to induce a sale. Reason B is not correct. This describes twisting recommending replacements without full disclosure, not making a false statement about coverage. Reason D is not correct. This is a failure to disclose, omission, not a false statement about policy benefits. Question 6. Under the Fair Credit Reporting Act, which of the following actions is a permissible purpose for an insurer to obtain a consumer report in connection with insurance underwriting? A. Conducting background checks for prospective employees. B. Evaluating a homeowner insurance application. C. Assessing creditworthiness for an auto loan. D. Screening tenants for a rental property. The correct answer is B. This option is correct because the FCRA specifically permits insurers to obtain consumer reports for underwriting insurance applications, such as homeowner policies. Reason A is not correct. Background checks for employment are a separate permissible use, unrelated to insurance underwriting. Reason C is not correct. Assessing creditworthiness for a loan falls under credit transactions, not insurance underwriting. Reason D is not correct. Tenant screening is for rental housing, not for insurance underwriting purposes. Question 7. Under 18 U.S.C. Section 1033, which type of conviction disqualifies a person from working in the business of insurance? A. Water damage from an accidental plumbing discharge. B. Conviction of a state-level violent felony punishable by more than 1 year. C. Conviction of any federal financial regulatory felony. D. Conviction of a misdemeanor involving job-related misconduct. The correct answer is A. The correct answer is that any felony involving dishonesty or breach of trust prohibits the individual, because 18 U.S.C. Section 1033 explicitly bars persons convicted of such offenses from participating in the insurance business. Reason B is not correct. The statute focuses on offenses involving dishonesty or breach of trust rather than violent felonies without a dishonest element. Reason C is not correct. This is too narrow. The prohibition applies to all felonies involving dishonesty or breach of trust, not only those under financial regulatory statutes. Reason D is not correct. Misdemeanor convictions are not disqualifying under a provision that specifically targets felony convictions. Question 8. In insurance terms, risk and uncertainty are distinguished based on the measurability of outcomes. Which description correctly differentiates risk from uncertainty? A. Risk arises only from insurable events. Uncertainty arises only from uninsurable events. B. Risk pertains to high-severity, low-frequency events. Uncertainty pertains to low-severity, high-frequency events. C. Risk pertains to situations with quantifiable probabilities. Uncertainty pertains to situations without known probability distributions. D. Risk describes losses due to perils. Uncertainty describes losses due to hazards. The correct answer is C. The correct answer distinguishes risk by its known probability distribution, whereas uncertainty involves unknown or immeasurable probabilities. Reason A is not correct. Insurability is not the basis for distinguishing risk from uncertainty, so this is incorrect. Reason B is not correct. Severity and frequency characteristics do not define the conceptual difference between risk and uncertainty. Reason D is not correct. The distinction between perils and hazards describes loss causes, not the measurability of outcomes. Question 9. Which of the following is an example of a speculative risk as opposed to a pure risk? A. Owning a home subject to potential damage from a flood. B. Investing in securities that may yield either a financial gain or a financial loss. C. Operating an automobile with a chance of accidental collision damage. D. Maintaining machinery exposed to possible breakdown and repair costs. The correct answer is B. Speculative risk involves the possibility of gain or loss, whereas pure risk only involves the possibility of loss or no loss. Reason A is not correct. Flood damage represents pure risk because there is no opportunity for gain. Reason C is not correct. Collision damage is a pure risk scenario since it cannot produce a financial gain. Reason D is not correct. Machinery breakdown risks are pure risk events without potential for profit. Question 10. Which characteristic is essential for a risk to be ideally insurable by an insurer? A. Potential for financial gain if no loss occurs. B. Exposure units that are homogeneous in nature. C. Ability to pool catastrophic losses across all insureds. D. Extremely wide variance in loss outcomes. The correct answer is B. Ideal insurability requires homogeneous exposure units so that loss frequency and severity can be predicted accurately and pooled. Reason A is not correct. Potential for gain indicates speculative risk, which is outside the scope of insurable pure risk. Reason C is not correct. Pooling catastrophic losses undermines insurer solvency and is avoided in ideal risk design. Reason D is not correct. High variance in losses makes outcomes unpredictable, counter to ideal insurability. Question 11. How does the law of large numbers enhance an insurer's ability to predict future losses? A. Adjusted loss ratios decrease proportionally with an increase in underwriting profit. B. The accuracy of expected loss frequencies improves as the number of exposure units increases. C. Variability in claim severity diminishes as policy limits increase. D. Premium adequacy is ensured when administrative costs exceed claims costs. The correct answer is B. The law of large numbers yields more predictable loss frequencies by averaging actual outcomes toward expected values as exposure units grow. Reason A is not correct. Underwriting profit does not directly affect the predictive value of loss frequency. Reason C is not correct. Policy limits do not reduce variability in claim severity under the law of large numbers. Reason D is not correct. Administrative cost relationships do not explain the predictive principle of large numbers. Question 12. During a routine inventory inspection, a warehouse manager notices several stacked pallets blocking access to fire suppression sprinkler heads. After a recent policy adjustment, employees are less inclined to report minor equipment damage, believing the company will cover any resulting losses. Which condition in this scenario represents a physical hazard? A. Reduced likelihood of equipment damage being reported. B. Insurance coverage for small losses. C. Stacked pallets obstructing sprinkler heads. D. A recent policy adjustment to claims procedures. The correct answer is C. The correct answer is the obstruction of the fire suppression sprinkler heads by stacked pallets, because physical hazards are tangible conditions that increase the chance or severity of loss, whereas the other options describe administrative or behavioral factors. Reason A is not correct. This describes employees' unwillingness to report damage, which is a behavioral or administrative issue rather than a physical condition. Reason B is not correct. This refers to the scope of coverage, not a condition that physically increases the potential for loss. Reason D is not correct. This is an administrative policy change and does not represent a tangible condition affecting risk. Question 13. After securing comprehensive cyber liability coverage, a technology firm's IT director begins storing sensitive data on unpatched software, believing any breach costs will be reimbursed. Concurrently, the company strengthens password policies and conducts regular security audits. Which behavior best exemplifies a moral hazard? A. Purchasing additional network firewalls. B. Strengthening password policies company-wide. C. Conducting regular security audits. D. Storing sensitive data on unpatched software. The correct answer is D. The correct answer is storing sensitive data on unpatched software because moral hazards arise when insured parties intentionally increase the likelihood of a loss, knowing the insurer will cover it, whereas the other options reflect proactive risk management measures. Reason A is not correct. Purchasing firewalls is a preventive risk management action, not an intentional increase in exposure. Reason B is not correct. These are proactive security measures aimed at reducing risk, not intentionally increasing it. Reason C is not correct. Regular audits serve as a risk control activity rather than a behavior that raises likelihood of loss. Question 14. Which element of an insurance contract refers to the mutual assent of the parties, typically manifested by an offer and its acceptance? A. Competent parties requirement. B. Legal purpose requirement. C. Consideration element. D. Offer and acceptance element. The correct answer is D. This option is correct because the mutual assent of parties, manifested by an offer and its acceptance, defines the offer and acceptance element of a contract. Reason A is not correct. The requirement for parties to have capacity ensures they can contract, but does not address mutual assent. Reason B is not correct. Legal purpose pertains to the contract's lawful objective, not the meeting of minds. Reason C is not correct. Consideration concerns the exchange of value rather than the agreement process itself. Question 15. In an insurance contract, the element of consideration is fulfilled on the insurer's part by which of the following? A. Structured risk management guidance to the insured. B. Periodic policy reviews and premium adjustments. C. Payment of covered claims, subject to policy provisions. D. Guarantee of favorable investment returns on premiums. The correct answer is C. This option is correct because the consideration element requires the insurer's promise to pay covered losses according to the policy terms. Reason A is not correct. Providing risk management advice is ancillary and not the insurer's binding promise of compensation. Reason B is not correct. Service activities like policy reviews do not satisfy the contractual promise of value exchange. Reason D is not correct. Investment returns are not a guaranteed contractual obligation in an insurance agreement. Question 16. Which of the following best describes the competence requirement for parties in a valid insurance contract? A. Both parties must hold an insurable interest in the insured property. B. The policy's purpose must comply with statutory regulations. C. The contract must transfer risk from insurer to insured. D. Both parties must have legal capacity to enter into the agreement. The correct answer is D. This option is correct because the competence requirement ensures that each party has the legal capacity to enter a binding agreement. Reason A is not correct. Insurable interest is a separate precondition, not the competence standard. Reason B is not correct. Compliance with regulations relates to legal purpose, not party capacity. Reason C is not correct. Risk transfer describes contract intent, not the capacity of parties. Question 17. Which element of an insurance contract requires that the contract's objective not violate statutory or public policy requirements? A. Mutual assent requirement. B. Competent parties requirement. C. Consideration requirement. D. Legal purpose requirement. The correct answer is D. This option is correct because the legal purpose element mandates that contract objectives be lawful and not against public policy. Reason A is not correct. Mutual assent addresses agreement, not the contract's lawful objective. Reason B is not correct. Competent parties concerns capacity to contract, not the lawfulness of purpose. Reason C is not correct. Consideration involves value exchange, not contractual legality. Question 18. During contract review, a policyholder notices that the insurer provided a fully drafted policy form with non-negotiable terms that must be accepted as is or declined. This arrangement exemplifies which contract characteristic? A. Contract of adhesion. B. Indemnity contract. C. Aleatory contract. D. Utmost good faith principle. The correct answer is A. This option is correct because it describes a take-it-or-leave-it policy form drafted entirely by the insurer without negotiation. Reason B is not correct. An indemnity contract defines compensation for loss but does not address whether terms are negotiable. Reason C is not correct. An aleatory contract focuses on exchange of unequal values based on chance, not on negotiability of terms. Reason D is not correct. Utmost good faith refers to disclosure obligations, not to the non-negotiable nature of policy terms. Question 19. An insurer agrees to pay covered homeowners' losses once premiums are received, while the insured's sole obligation is payment. This arrangement illustrates which type of contract? A. Executory contract. B. Bilateral contract. C. Aleatory contract. D. Unilateral contract. The correct answer is D. This option is correct because only the insurer makes a binding promise after premium payment, while the insured's only duty is to pay premiums. Reason A is not correct. An executory contract refers to obligations pending performance, not the one-sided promise structure described. Reason B is not correct. A bilateral contract requires mutual promises by both parties at inception, which is not the case here. Reason C is not correct. An aleatory contract involves uncertain future exchange values, but does not capture one-sided promises. Question 20. Which of the following best describes the primary ownership structure and Profit distribution mechanism. Distinguishing stock insurance companies from mutual insurance companies. A. Stock insurers are owned by policyholders and issue participating policies, whereas mutual insurers are owned by shareholders and issue non-participating policies. B. Stock insurers are owned by shareholders and issue non-participating policies, whereas mutual insurers are owned by policyholders and issue participating policies that return surplus through dividends. C. Stock insurers are organized as nonprofit associations owned by policyholders, whereas mutual insurers are for-profit corporations owned by shareholders. D. Stock insurers return profits through premium reductions, whereas mutual insurers pay dividends directly to policyholders based on surplus. The correct answer is B. The correct answer is that stock insurers have shareholder ownership and issue non-participating policies, while mutual insurers are owned by policyholders and issue participating policies that distribute surplus as dividends. Reason A is not correct. It reverses the true ownership roles of stock and mutual insurers. Reason C is not correct. It mislabels both the organizational form and ownership of each insurer type. Reason D is not correct. It incorrectly describes how stock insurers distribute profits compared to mutual insurers. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.